what are the key things banks are looking at when assessing a home loan application in WA?
Look, the home loan applications are assessed more or less the same way, irrelevant of which state you are in. The only thing that differs is the stamp duty, because every state will have their own percentage that they charge, and there are other fees and charges. Banks are obviously working nationwide, so they will approve a loan in a similar fashion, irrelevant of the client is in Queensland or Western Australia. What are they looking for? Look, when you really want to simplify it, look, there are a lot of nitty-gritties in there, but if you look at three basic pillars, the first one is, do you have income to service the loan that you're asking for? And it's a little bit more complicated than this is what I get and this is what I have to pay. Second one is, do you have deposit or equity? And the third one is your credit score. If these three boxes are ticked within reasons of your borrowing power, well, you're done. You will get a loan. Right? If your borrowing power is 800 and you want 1.5 million, won't happen. Likewise, the equity and the deposit, you have enough savings to buy a home for a certain amount, but you want to buy for double that price, again, you will have some issues there. So that's where, again, the lending manager, home loan manager, or the broker you are working with will sit down, look at your situation and say, hey, if I look at all of this, I can say that you are good to go for a purchase price of X. They might have borrowing power higher than that, but their deposit might not be enough. Sometimes they will have a lot of deposit, but their income can only service a certain amount of loan. So we just got to cross-check everything to work out that based on all these markers, what is that price point where it satisfies all the requirements.
Okay, and you're saying that if they have enough equity, they can use the equity as a deposit?
100%.
Okay.
100%. For the second purchase. They will only have equity if they have already bought something in the past.
And if, for example, they have a commercial property, can they use the equity of a commercial property to buy a residential property? No.
You can do it the other way around.
Okay.
So if you have a residential property and you have equity in there, you can use that to buy a commercial property, but not the other way around.
Not the other way around. Okay.
Because they have, the reason for it is basically there is regulated lending and non-regulated lending. That's why.
Okay. So how much deposit do you really need to get a home loan approved in today's market? What is the
Great
enough?
question. Great question. Look, there's no max. Max is like as much as you have is better, right? But if somebody sat down and asked me, give me absolute minimum, recommended, and practically good deposit. So absolute minimum, I would say to someone to go for about 7 to 8% deposit, depending on the purchase price. The higher the purchase price, you are looking closer to 8 or just over 8%. The formula behind that is that when you put an 8% deposit in, your lending goes to 92%, you actually end up paying a pretty hefty lender's mortgage insurance, which get capitalized within the loan. And once we add it to the loan, we have to recalculate the LVR, and then it cannot exceed 97%. Because LMI is so high at that level of lending, usually at 8%, you will stay within 97. Now, if that property is 5 million, chances are you need 12% to stay within 97, because LMI will be very, very high. If that property is only 500, you can potentially get away with 5.5% deposit, because even with the LMI, you will still stay within 97%. So it will depend, and we'll actually go into the calculations. We'll put in the figures to work out that, hey, what is that number which is keeping us within that 97, and then we can back calculate it to let the clients know that, hey, for this property or this purchase price, your minimum is X, Y, and Z. I recommend it. I always tell people to aim for at least 10%. There are a few benefits of it. The minute you go to 10% deposit, you usually come within that 90% lending, and it makes a small difference to your lender's mortgage insurance and also to your interest rates. And if you can go up to 20%, well, there's nothing better than that, because you avoid the LMI, you get the cheapest rate. But look, there are clients that we see who are saying that, hey, look, we don't have 20, but we have more than 10. Every extra percentage of deposit that you can put in is better, is good. So you should aim for it. But at the same time, in the market we are in right now, if somebody is sitting on 5 to 10% deposit, and they are saying, oh, look, let me get to 20, which is saving of another 70, 80, 90 grand. And if that takes another 2-3 years, that's a very unique situation. They might need to consider getting in now, pay the LMI as an opportunity cost, because in 2 to 3 years' time, they might have 20% deposit, but that same property now might be 200K more, which means whatever they aimed at 20% deposit is even higher, and they are paying a lot more than LMI to acquire the same property. So sometimes you got to like look at all the numbers and figures and where the market is going, and really make that decision.
Okay, cool. And what is for the first home buyers? What sort of deposit, minimum deposit they need to get their foot through the door?
Look, again, it can differ from bank to bank quite a lot these days because of the federal schemes, state schemes and whatnot, and not all banks are participating in those schemes.
Okay.
So I'm going to leave them on side because we don't really do those.
Okay.
So again, that deposit requirement is the same. Absolute minimum, you're looking at about 6 to 8% depending on the purchase price.
Okay.
Anything higher than that will only help you.
So ANZ is not participating in the stage. Okay.
So there's very few banks who are part of that because there's probably close to 60 lending institutions, and there's only 4 or 5 banks who are doing that.
Okay. Okay. So you've already explained us what's the benefit of higher deposit, that is not paying LMI if it's more than 20%, and you can get a benefit on your interest rates. Is there any other benefit they get from having a higher deposit?
Loan is lesser, you're paying lesser interest, you're creating more equity from day one, which means you can go into your second and third a lot quicker, because you created from day one. And obvious ones are you will avoid the lender's mortgage insurance, and you'll get the best discounts from the get-go.
Okay.